So last year I made a video called my investing strategy for 2021, and that strategy ended up making me a lot of money. So it's a new year, 2022, and I wanted to remake that video and show you guys my new updated investing strategy for this year. So basically we'll be covering things like my investing strategy when it comes to stocks, crypto, retirement account strategies, real estate, and a lot more. My whole goal is to give you guys a solid understanding of how I invest my money, and hopefully that's going to help you out. Let's get started. So the first part of my investment strategy is retirement accounts. Now I live in the US, so what I'm saying right now is specific to plans here, but if you are in another country, you're gonna have your own versions. The reason why I love retirement accounts is because it encourages long-term investing, aka buying stocks, selling it, and then forgetting it. Being self-employed, I have access to a solo 401k. So basically my company is hosting a 401k plan for me. This section is gonna be short, but the main idea is that I will be maxing out every retirement plan I can. If you guys have access to a 401k through your employer, I definitely recommend taking advantage of that, especially if they have an employer match, which is basically free money. You're essentially getting up to 100% return on all the money that they are matching. In addition to that, I also recommend doing a Roth IRA. This is another retirement plan with a $6,000 limit if you're under 50 and a $7,000 limit if you're 50 or older. Both those limits are if you make under $129,000 as a single filer. It's actually gonna phase out once your income reaches $144,000 or over. So since my income is above that, I'm gonna have to do a backdoor Roth. I'm also considering doing a defined benefit plan, and this is a way to sock away a lot of money per year in my own pension fund. It's more advanced, but you have to use a TPA and actuary to run numbers on how much you can contribute based on your age and salary. It's not gonna be good for everyone. It's only good for high earners, and it gets better the older you get. Next up is investing in stocks in my taxable accounts. This will likely be my second biggest investment this year. So 2021 was a great year for investing. The S&P 500 went up a lot, tech stocks crushed it, and overall it was just a great year for making money. However, 2022 has been a lot tougher, right? Tech is down, overvalued stocks came crashing down, and even the S&P 500 is down pretty significantly. A recession could be imminent, but that does not mean I'm just going to be selling stocks since it's impossible to time the market. Everyone that thought the market was overpriced from 2008 to 2021 lost out big time. And I just prefer to look historically and see the bigger picture. That's why I'm going to be continually investing into solid blue chip and tech companies, and more importantly, index funds. I mean, most of my stock allocations this year are going to be going into index funds like always. I'm not sure what the exact percentages are going to come out to be, but it'll likely be around 70% index funds and then 30% stocks. Since a lot of things seem overbought and overvalued, it's very important to look at the fundamentals, cash flow, and any moats of these companies. That's something that Buffett really likes, but of course, all these cannot matter when it comes to stock price, because all it really is like a supply and demand thing. That's why I'd rather invest in the market as a whole. That's why I really love S&P 500 index funds, and you guys can literally use any platform. I will put some links down below if you do want to get some free stocks. But yeah, I know a lot of you guys are thinking it's really scary to invest right now, and you would be right. But the recent dips mean that a lot of really great stocks are on sale right now. Tech's going to continue to crush it into the future, and right now you can get some really big solid discounts on companies like Meta, Apple, Microsoft, and more. With my stocks, I almost always hold long term. This is much more reliable growth. It's easier on your taxes, it's less stress, and you can focus on just making more money on your active business. For me, that's just a really big downside to day trading. And for me, I'm always going to be on team DCA, dollar cost average, because really your time in the market is way more important than trying to time the market itself. I'll be staying up to date on current events, reading free newsletters like Morning Brew, Robinhood Snacks, or even my own newsletter, Hustle Club, as all these will help you stay up to date on current events, which will impact your investing decisions. So with the recent downturn, you might be thinking if now is a good time to invest. The answer, if we zoom out 20 years, is a resounding yes. When things are crashing, it actually means we have more opportunity to make money. If you aren't investing over the next year, then you are severely hindering your net worth growth, because now is when millionaires are made. So next up is crypto, and we've seen crazy growth in the crypto world as as well as a recent huge correction. But yeah, looking at the NFT and metaverse world, it's definitely exciting to see all this new technology being used in real world applications. Take the Bored Ape NFT collection, for example, one of the most prestigious collections with floor prices well above $300,000. Crypto is probably going to be my fourth largest investment this year, and I will say that that could change depending on how the markets react. But yeah, I prefer to have a more dynamic investing style based on my allocations. Now, you guys probably know this, but there are two main methods to investing: dollar cost averaging and lump sum. In my opinion, it's much safer to dollar cost average because you avoid volatility. But if you really like and believe in a project, it might be better to go all in at a good entry point, and then you can choose to either forget about it or continue to dollar cost average. And this can result in a more safe long-term crypto investing strategy. So here's a safe long-term crypto investing strategy for you guys. Invest by dollar cost averaging into the most popular coins like Bitcoin and Ethereum. Altcoins are riskier. I mean, look at just what happened to Luna. And if you want to avoid that type of risk, then this is more of like a set it and forget it type of plan. Now, when it comes to what platform to use, there are many, but one that I definitely recommend is Slingshot, who's actually sponsoring this video. Slingshot is a Web3 crypto trading platform that lets you discover and trade over 7,500 crypto tokens at the best prices and with super fast transaction speeds. The process is super simple. All you have to do is connect a wallet like MetaMask, and you can safely start trading as your wallet remains private. Plus, you have full control over your assets, which is really important for utility on the blockchain. You get access to real-time data to keep up with the markets that move incredibly fast nowadays, and even a live global chat with traders all over the world. In addition to that global chat, they also have their own Slingshot 2099 NFTs that you can buy on the platform, which give you pretty cool benefits. Right now, trading is only available through desktop, but soon they're actually going to be launching a mobile app where over 1 million people have already signed up for the waitlist. With the recent crashes in price for Bitcoin and pretty much every cryptocurrency, I'll definitely be looking to put a percentage of my investments into the market while things are pretty cheap. So if you want to reserve your spot and earn up to $2,500 in NFT rewards, you guys can use the link down below to sign up for Slingshot and start trading today. But yeah, getting into my crypto altcoins investing strategy, what I'm gonna do is dollar cost average into fundamentally sound altcoin projects with utility and then sell profits at the peak of altcoin season. Then I'm going to wait for the bear market to establish, get a really sick re-entry, and then wait for the next bull run. Of course, the recent stuff with Luna just kind of killed trust in altcoins, so I will be putting less here and more into the big ones. But yeah, really assess how much risk you want to take. Is it worth it getting into altcoins? And if not, maybe just stick with Bitcoin and Ethereum. And then I almost forgot, investing into NFTs. This requires doing a lot of your own research, and you'll have to look at the company behind the NFT, look at their roadmap, ecosystem, tokenomics, all that stuff. If you guys want to flip NFTs, you're going to want to niche down and do extensive research on the value in that specific market, whether it be collectibles, artwork, or even digital land. For me, I prefer more passive investing so I can focus on growing my business. So I'm more of like a dollar cost average into coins I understand and believe in. That being said, I do have my ears open for new NFT projects, and I do have friends that are deep in the crypto space who I talk to. It is very risky, but I do have some capital that I can risk on this type of stuff. So number 4 is real estate, and my plan this year is to make real estate my biggest investment out of all my investments. So last year I set goals to acquire investment in real estate, and unfortunately that's something that I was actually not able to do. So that was probably one of my biggest fails of last year. Just sort of want to be transparent with you guys. So yeah, I was looking at short-term rentals here in Lake Arrowhead, California. I also was looking at multi-unit properties in other states. So when it actually came down to buying them, getting the loan pre-approved, all that stuff, I really lagged on that. And yeah, that's something I definitely need to hold myself more accountable on this year. So if you guys can help me out, I'd really appreciate that. But yeah, anyways, why do I really want real estate, right? I honestly think real estate is probably one of the best investments you can possibly make. It's a leveraged investment, which means that you're putting down payment, which is normally, let's say, 5 to 25% of the purchase price, but you're actually controlling an asset that's worth way more than you actually put down. Beyond that, there are so many tax savings when it comes to real estate, especially if you are able to understand the whole real estate professional IRS status. Knowing that you can actually take your depreciation from your investment properties and use that to offset your active income. This is such a powerful tool because as you acquire more and more real estate, you'll be able to do cost segregation studies and actually accelerate the depreciation on those properties. And that's going to allow you to offset huge amounts of active income, right? So if you combine that with making more money, but offsetting all that money with your real estate, then it becomes a game where you're actually not paying as much tax on your active income, which is absolutely amazing. So yeah, my goal for this year is to acquire one short-term real estate property. I'm starting to get a little bit more specific because I really want to hold myself accountable, as well as 1 to 2 multi-unit properties out of state. So I'm going to invest outside of California because California is super expensive. The land to improvement costs out there are just not very good, which basically means that the land is worth a lot more than the building itself, which means you can't really take any depreciation on it. And yeah, when you have investments like that, it becomes really hard to do a cost segregation study because there's not that much actual building to depreciate. So I'll be looking at cities like Kansas City, Missouri, Nashville, Tennessee, where I actually am right now. And yeah, I just think there's a lot of opportunity in buying rental real estate in states that are a little bit more affordable than California or New York. And really, real estate becomes a great way to diversify outside of stocks and crypto, right? Almost anyone, they can put money into stocks and crypto. It's a pretty easy investment type, but real estate, it takes a lot more preparation, and that really weeds out a lot of people, making it much easier to find investments that can make you a lot of money. But yeah, I have a lot more to learn about real estate, so I'll be doing a lot of research by reading books, watching YouTube, and if you guys want to invest in real estate in the future as well, I definitely recommend doing a lot of research and learning before doing so. So the 5th investment I'm making this year is investing in a real estate investment fund. So last year I did put a small amount of money into one of these funds. It's basically a completely passive way to invest in real estate. Now, the fund that I put my money into last year, they invest in student housing in Los Angeles. So instead of me having to go out and raise money and buy a property myself, they're actually just handling all of that, finding the properties, getting the tenants set up, managing the property, all that stuff. So very passive. I do enjoy receiving a check every single quarter, and while it's not that much, it is definitely a passive way to invest your money and diversify your holdings. So yeah, I will be putting more money into a fund just like this. Not sure if I'm gonna be putting the money in the same exact fund, but it's going to be something very similar. Now, beyond the small cash flow that we do get, you also get a portion of the depreciation of that building. So that depreciation, like I mentioned earlier, can be used to write off part of your income. For most people, it's going to be part of your passive income, but for some people, real estate professionals, you'll actually be able to write off your active income. So yeah, I'm a really big fan of investing in funds like this because it allows you to get into real estate investing with much less money. And it's also way easier than having to go out and find deals yourself, as well as managing those properties yourself. So yeah, very passive way to invest your money. And if you are looking to get into real estate, but you don't have the funds to put a whole down payment on a house, or you don't have the time to invest into something like that, then yeah, this is a great way to start putting your money into real estate. Number 6 is angel investing. And that's basically investing into early stage startups that I believe in exchange for equity. So last year I did my first deal, and my plan this year is to actually do at least 8 more deals. And right now I've invested in 4 new companies that I really believe in. So I'd say that I'm pretty much on track. I will say that angel investing is very risky. You can lose all your money. And let's say you do 10 deals, 9 of them are probably gonna be worthless. One could 20 to 100x if they do get bought out or go public. But I will say that valuations, they increase all the time with getting more funding or going from a Series A to a Series B and so on. But it is super illiquid and you can't pull out any money until something big happens. And yeah, even if the valuation keeps going up due to the company getting more rounds of funding, it can still go to 0. So that is always a big risk. This is really good for people with extra money that want to invest for potential higher returns. But for most of these investments, you are going to have to be accredited. But there are platforms like Sweater that are popping up all the time, allowing you to invest in venture capital without being accredited. Personally, I'm gonna be looking for opportunities in fintech, social media, and influencer marketing, because I really do think that these are gonna be huge industries. All right, so last on the list is self-improvement. And really my goal this year is to spend $300,000 or more on self-improvement and investing into my business. So books, seminars, courses, coaching calls, as well as building a team of really great people. In my opinion, this is going to be the best use of money this year for me because it's going to blow everything out of the water in terms of ROI. Yes, there is some risk since ultimately it's still up to me to turn this category into money, but when done right, it kicks all of the other investments out of the water. If you put $1 into stocks, you might have $1.10 in a year, or maybe like $2 in 5 years. Given this market, it is a little bit more risky in the short term, so I don't like to look at it like that. But if you look at these short-term benefits of, investing your money into self-improvement and your business, that $1 can turn into, let's say, $3, $5, or even $10. Plus, every dollar you spend on self-improvement results in stuff in your brain that lasts forever. And the only risk is, you're sinking money into your business or yourself, but that in itself is not going to result in more money. You actually need to do something and take action to turn that money into more money. For me, I'll be investing a lot of money into my team members, and they're the ones that are going to be able to help me run the day-to-day operations while I focus on some of the bigger moves and decisions. This is all stuff that is going to help me get closer to an 8-figure company, which is almost impossible without a team. Now, there's no need to spend $300,000 for you guys, right? Even if you spend, let's say, $200 on books for the year, that is going to be one of the best ROIs. It definitely depends on where you are at, but if you guys are actively trying to build a business or get into entrepreneurship, this is the most important category to put your money into because you're really betting on yourself, something that you can control. A lot of these other assets that I talked about, they are completely out of our control. And yeah, that's why I really focus so much on this channel about getting into entrepreneurship. This is by far my favorite category, but it's also one of the least passive. So yeah, investing really is a lifestyle. These are the 7 main asset classes that I'm investing into personally this year, and I really do believe that they will offer me long-term significant increases to my net worth, as well as get me closer to financial freedom. Now, to close out this video, I really want to say you guys really need to try and increase your income if you want to be able to invest significant amounts of money, right? Like saving that $3 on that coffee at Starbucks is not going to make you really, really wealthy. Instead, if you can work on increasing your income as well as reducing your expenses or keeping them the same or not too much higher, then that's really when you're going to win, right? It's not a perfect system. That's why the rich get richer. And yeah, you really just need to have money to invest after paying the bills. There are plenty of people out there getting rich based off of their earned income, but way more people are actually getting wealthy through their investments. And that's really the best way to gain wealth because you are taxed way, way less. Either way, I'd say incorporate investing into your financial strategy if you want your money to work for you. That's really my strategy this year. I'm not gonna keep too much money in my checkings account. Rather, most of it is going to go into these 7 asset classes. Again, if you guys want a free stock with Robinhood, I will drop my exclusive link down below. And if you also want some free crypto, I will have links down below for that as well. Thank you so much for your time. I hope you guys found this video helpful. If you guys did, make sure to hit that like button and also subscribe for more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Again, thank you so much for your time, and I'll see you in the next video. Peace.